Pendings in Lafayette Parish have plummeted 15% in January. Is the market finally cooling off? Stay tuned to find out. Hey, if you're a homeowner, investor, or interested in buying property here in South Louisiana, we have all the data you need. I'm Jay Ray with Katie Real Estate, and this is your market update. Lafayette Parish has experienced a 15% decrease in pending sales in January, year over year. So it looks like, although we had a record-breaking January in closings and volume, the pendings seem to have cooled off, meaning we should expect slightly fewer closings in the next 30 to 60 days compared to last year. However, when you look at the number of pendings for January, you can see that we were well above the average number of pendings going back to 2012, indicating we should have an outstanding first quarter equal to or better than the first quarter of 2021. And although pendings have cooled, demand continues to hold strong. In fact, the MLS reported that over 19% of homes sold in January were above list price. This is double the average over the last decade, indicating a strong demand for housing and a short supply of homes for sale. And as always, we like to keep an eye on what is happening with interest rates. Now, in order to predict where the interest rates will go, you have to look at the 10-year Treasury yield. Although the Fed does not directly control interest rates, they do control the 10-year Treasury yield. Now, by raising or lowering the Treasury yield, they hope to influence the interest rates. In other words, the Treasury yield and interest rates have a relationship. When the Treasury yield goes up, so do interest rates. You can see this chart that the 10-year Treasury yield has skyrocketed in the last 3 months from 1.43 on December 1st, 2021 to 1.81 on February 1st. So we can expect interest rates to follow. In this chart, you can really see the relationship between the mortgage rates and the 10-year Treasury yield over the last 50 years going back to 1970s. Over the last 5 decades, the average spread between the 10-year Treasury yield and the interest rates is around 1.7. We also look to the experts. We average the predictions between Freddie Mac, Freddie Mae, and the Mortgage Brokers Associations and the National Association of Realtors to come up with what we expect moving forward. As you can see, we expect the rates to increase to above 3.75% in the fourth quarter of 2022. Is this bad? Sometimes we need some perspective. Looking back at the last 5 decades, you can see that there's never been a better time to buy than now, but we do expect interest rates to rise. I hope you found this information valuable. If you're interested in buying or selling real estate, I would love to help. Stay tuned for next week when I break down March's sales and volume. I'm Jay Ray with Katie Real Estate. Thank you for watching.